Bitcoin, the world's first and most widely recognized cryptocurrency, has seen an extraordinary surge in value, recently surpassing the $90,000 mark, an all-time high that has garnered global attention. This surge marks a significant milestone in the history of Bitcoin, which is now valued higher than a kilogram of gold, a symbolic shift in how digital assets are perceived relative to traditional stores of value. Experts attribute much of this remarkable price increase to a combination of factors, not the least of which is the political landscape in the United States, particularly the outcome of the recent U.S. Donald Trump's victory in the election has acted as a catalyst for renewed optimism in the cryptocurrency market, particularly among Bitcoin advocates. Trump, who has long been a vocal proponent of digital currencies, made significant promises during his campaign to bolster the U.S.'s position as a global leader in the crypto space. His policies, which include keeping a portion of U.S. banking reserves in Bitcoin, as well as his intentions to deregulate the cryptocurrency market, have injected a sense of excitement and confidence among investors. The idea of a more crypto-friendly regulatory environment under Trump, coupled with his pledge to replace key figures at the U.S. Treasury with younger, tech-savvy leaders, has led many to believe that the U.S. could soon become a hub for cryptocurrency innovation and development. This policy shift has been particularly well received by the crypto community, which sees Trump's rhetoric and plans as highly favorable to the growth and adoption of Bitcoin and other digital currencies. One of the most notable aspects of Trump's approach is his stated intention to remove Gary Gensler, the current chairman of the U.S. Securities and Exchange Commission (SEC), who is known for his more stringent regulatory stance toward cryptocurrencies. While some analysts view this as a step toward greater financial instability, others believe it would allow the cryptocurrency market to evolve more freely and spur innovation in the sector. Beyond the political landscape, other factors have contributed to Bitcoin's meteoric rise. One of the most significant developments in the market has been the approval by the SEC to launch Bitcoin exchange-traded funds, ETFs. These funds allow investors to gain exposure to Bitcoin without directly purchasing the cryptocurrency, opening the door for institutional investors who may have been previously hesitant to engage with the market due to concerns over custody, security, or regulatory issues. The introduction of ETFs has led to a massive influx of capital into the market, further driving up Bitcoin's price and solidifying its role as a dominant asset in the financial ecosystem. Bitcoin's impressive price growth has been staggering, with its value increasing more than 2.5 times since the beginning of the year. Many experts believe that this upward trend will continue, and some predict that Bitcoin could surpass the $100,000 mark by the end of the year. A number of bullish analysts are even speculating that the cryptocurrency could eventually reach as high as $110,000 to $115,000 in the short term, driven by the year-end rally that Bitcoin has traditionally experienced. However, some cautionary voices suggest that the price increase could be a bull trap, with potential profit-taking from investors prompting a correction in the near future. Despite the volatility inherent in the cryptocurrency market, Bitcoin's market cap has reached astronomical levels, now exceeding $1.8 trillion, surpassing the GDP of entire nations like Spain. As more investors and institutions adopt Bitcoin as a store of value, a growing sense of scarcity has taken hold, with many speculating that the price of Bitcoin could one day reach as high as $500,000 per coin if large nations and financial institutions begin to accumulate it in significant quantities. While Bitcoin's rise has certainly captured the imagination of many, it is not without its challenges. One of the key criticisms leveled against Bitcoin is its high transaction fees, which can range from $20 to $50 per transaction during times of network congestion, as well as the relatively slow processing times. These issues have led to the development of alternative cryptocurrencies, many of which operate on smart contract platforms and offer much lower transaction fees and faster settlement times. Despite these challenges, Bitcoin's unparalleled recognition, its first-mover advantage, and its substantial market capitalization continue to position it as the leader of the cryptocurrency pack. As Bitcoin continues to gain traction, it is undergoing a societal acceptance phase, akin to the historical shift from gold coins to paper money. Increasingly, countries like El Salvador have made Bitcoin part of their national financial strategies, with the government buying Bitcoin daily. This growing acceptance is accelerating, and many believe that more nations will soon follow suit, further integrating Bitcoin into the global financial system. The potential for Bitcoin to serve as a widely accepted, decentralized store of value is becoming more likely, as it increasingly resonates with both individual investors and large institutions. However, Bitcoin's future is not guaranteed. For the cryptocurrency to lose its value, there would need to be a widespread erosion of trust among its users, leading to mass withdrawals from the market. While this seems unlikely at present given Bitcoin's growing institutional support and recognition, it remains a risk. Regulatory challenges, technological obstacles, and market volatility are all factors that could impact Bitcoin's long-term viability. Yet, despite these challenges, Bitcoin has proven to be remarkably resilient, and as long as major players in the global financial system continue to embrace it, the future of Bitcoin appears increasingly promising. In addition to political and regulatory factors, the broader economic environment also plays a crucial role in shaping Bitcoin's trajectory. Recent actions by the Federal Reserve, including a 25 basis point rate cut, have made riskier assets like Bitcoin more attractive to investors seeking higher returns in a low interest rate environment. As more institutional players recognize Bitcoin's potential not only as a store of value but also as an investment asset, its role in the global financial system is likely to continue strengthening. Technological advancements in blockchain, alongside growing institutional interest, could accelerate the adoption of Bitcoin, potentially driving its price even higher. While Bitcoin's growth story has been largely driven by a perfect storm of political, economic, and technological factors, the cryptocurrency market remains unpredictable. Analysts continue to debate whether the current bull run is sustainable or if it represents a fleeting moment of speculative enthusiasm. The key to understanding whether Bitcoin's recent surge has lasting power will be monitoring its ability to maintain strong support levels as more capital enters the market and institutional adoption continues to grow. If Bitcoin can weather potential regulatory challenges and continue to evolve, it may very well establish itself as a core component of the global financial landscape in the years to come. Bitcoin, created in 2009 by the mysterious pseudonymous figure Satoshi Nakamoto, is the world's first cryptocurrency and the most recognized digital asset to date. Unlike traditional currencies issued by governments, Bitcoin operates solely in the digital realm, trading exclusively online without the need for physical coins or notes. Its design is based on a groundbreaking technology called blockchain, which ensures that every transaction made with Bitcoin is securely recorded and immutable. At its core, blockchain technology is a decentralized ledger system. This means that Bitcoin transactions are not stored on a single centralized server, but rather on thousands of computers spread across the globe, known as nodes. Each node maintains a copy of Bitcoin's entire transaction history, creating a public record that is continuously updated as new transactions occur. This decentralized nature of Bitcoin makes it highly resistant to censorship and fraud, as no single entity or computer controls the data. In essence, every participant in the Bitcoin network holds a transparent, immutable record of all past transactions. This decentralization is one of the defining features that separates Bitcoin from traditional currencies. In traditional banking systems, a central authority, such as a government or financial institution, is responsible for verifying and recording transactions. In contrast, Bitcoin's blockchain allows transactions to be validated by network participants, miners, using complex cryptographic techniques, ensuring that the system remains secure without the need for a central governing body. Despite its immense popularity and significant impact on the global financial landscape, the true identity of Bitcoin's creator remains unknown. Satoshi Nakamoto, the pseudonym used by the person or group of individuals who developed Bitcoin, has never been revealed, adding an element of mystery to the cryptocurrency's origin. Nakamoto's anonymity has only fueled speculation about who they might be, with some believing that the creator could be a group of developers, a government entity, or even a well-known tech figure. However, despite years of speculation, the identity of Nakamoto remains one of the greatest mysteries of the digital age.